We are live, guys. Welcome to the channel. My name is Patrick Lorienti. For those of you who are new to the channel, welcome. I am a licensed real estate agent here in Denver, Colorado. And guys, in today's video, we are talking about why homes aren't selling. If your home is sitting on the market for longer than expected or has, and maybe you already took it off or you're struggling to attract offers, guys, this video is for you. In this Denver real estate market update, which we do live every single Wednesday, I'm going to break down the latest data for June 2025 and reveal why so many sellers are feeling stuck. The reality is, guys, it's not just you. From rising inventory and longer days on market to price reductions, shifting buyer behavior, guys, I'm going to give you a fresh and honest look of what's actually going on. All right. Now, here's my disclaimer. This video is for informational purposes. While I am licensed, we are here to give you guys a sense and understanding of what's happening in the market. And this is not to be considered a solicitation, especially for those of you who are on the market and currently a party to a broker agreement. Now, how I'm going to review this video is we're going to go simple, sweet, and quick in terms of why this is happening. And I'm going to give it to you in a very digestible way. Then we're going to go through market update. And then I'm going to take you to a market tour on Zillow. And we're going to look at some things together. And I'm going to just show you some ideas, some thoughts in regard to why some homes are selling faster than others and why some might be sitting longer than others. With that, guys, let's dive in. I'm going to share my screen with you. And for those of you just joining, know that you guys are welcome to ask any question specifically that you want answered, and I will do my best to get you an answer. So, guys, I told you I was going to give you the short, sweet, easy version of this to really make sense of why listings aren't selling. Okay, here it is. Inventory trends. Let me make sure you guys can see this. I'm going to bring my video down here. All right, add to stage. Here we go. Inventory trends. So guys, look at our inventory. Imagine going into Walmart and you need the new TV and there's one TV and you've got 20 people in line for that one TV. The supply and demand ratio there is in such a way that TV is going to cost a lot of money because there's one of them and 20 of you buyers. Well, imagine that same thing happening, but opposite. There's 20 TVs in one buyer. The supply and demand there would say, okay, that TV is going to be less price. Now, that's what's happening with the market. As you can see here, we've got inventory climbing up and up and up and up. Guys, we are past the all-time high of last year, which, as you can see, was like well beyond the all-time high of the previous 4 years. And so we hit 13,400 listings last week. That is up from 9,600 listings of last year. And again, we're over 2,000 listings in the peak of last year, which we are 11,400. Guys, this is why listings are taking long to sell and sellers are getting frustrated and pulling out their hair, some hopeless, some taking their house off the market, wondering like what is happening. Okay. If you guys haven't felt it yet, you will soon. I'm experiencing a negative price curve in today's market. Guys, this is why. Okay. You see this huge increase in inventory. Buyers have that many more options of homes to look at. And if we look over here to showings, so if inventory is supply, showings are demand, okay? Here's what's promising. You would look at this chart I'm going to show you and think, okay, well, showing demand is really high, isn't it? And I'm going to say, yeah, you're not wrong. Showing demand right here kind of falls in the middle. But like, if you look at it, we're at 24,000 showings. Last week, it was 26,000 showings, which was just under 2021, the hottest market we've experienced in maybe the history of the market. So showing demand is high. So you would think, okay, well, we got a lot of buyers. They're buying. So even though inventory is up, why isn't the market doing well? Well, if you look at showings per listing, we're at all-time lows in the last 5 years, right? Because all of these showings are being dispersed and this many more listings to where you just aren't seeing showing demand keep up with the rise of inventory. So guys, that's why we're seeing the market shift. If you haven't been privy to this channel, I highly encourage you guys subscribe. So many of our people, the calls I'm getting from the YouTube channel are folks that really appreciate the digestible nature of this content and really being able to understand the market. And the reason I want you to subscribe is you might not be looking to do something today or tomorrow, maybe not even next month, but when the time comes for you to buy, sell, or invest here in Colorado, you're going to want this information. So hit the subscribe button and let's get into the market update. So again, first up, that's why the market is shifting. But let's go into a little bit more in-depth market update here. And then I'm going to bring you guys over to Zillow or the MLS. And I'm just going to review the market with you, okay? So that you guys can see actual listings and what's performing well, what's not performing well. And like, there's no better reality than actually looking at homes on the market and seeing that, in all reality, guys, whether you've listed and took your house off the market, you're on the market, like it's not just you. The market as a whole is experiencing longer time on market, etc. So bear with us, stick around. This is going to be a good one today. Now let's go to we're going to stop screen share. Now I'm going to bring you to my market update here. And here we go. Inventory hits 13,200 homes, tempered growth despite strong new listings. You know what, guys? Hold on one sec. We might have another update, a more recent one. Yeah, June 17th. Okay, I haven't read this. So just know I like to go through this with you guys. As I'm going through it, you're going through it. So let's do this. Hey, whoever's got a cup of coffee, cheers to you. Throw your comments in the comment section. Happy to answer your questions. Inventory is following a familiar summer script, creeping up even as new listings arrive at a slower clip. Buyer traffic is easing off the spring highs, yet contracts keep rolling in at a consistent pace, which is interesting, right? How are contracts, that the amount of homes going under contracts, how are they continually rolling in at a consistent pace? Oh, stick along, guys. Days on market are lengthening and price reductions are becoming part of the playbook, with plenty of choices for home shoppers, but still enough demand to keep well-positioned homes moving. Guys, what they mean by that is there are homes that are moving within a week, within 2 weeks. One of my listings just went under contract in as little as a week. It happens in this market, but the way to achieve that is so much different. And likely the frustration being caused amongst many sellers in the market today is you just don't have this type of information, the expectations, the ways in which to position your home really, really well. And so that's why we do this for informational purposes, to help you guys win in today's market. Inventory. Last week brought 1,400 fresh listings to Denver market, about 22% below mid-April surge and much closer to the pace we've seen the past 2 years. Sellers may think twice about jumping in when headlines scream rising inventory. Even with that restrained flow of new listings, total active inventory grew by 250 homes, closing the week at 13,700 properties. Guys, I promise I can read here. 13,437 properties for sale across Denver Metro. Guys, I'm not sharing my screen. I'm sorry. That's why we got it down here. This is what we're talking about here. This inventory chart, which we just went over. Okay. Let me see if I could scroll in. There we go. If the recent slowdown in new listings continues through the summer, the pace of inventory growth should moderate. Guys, we need that. We need this inventory line right here to come down and hopefully set a new, standard. But as you can see, this gap is showing us that the trends are not following suit with previous years, relatively speaking. They always tend to go up from week 1 to week 25, 27, 30. They kind of plateau and then they start to fall end of year. So that trend is holding true, but we're not seeing any normalcy in terms of the trend lines being similar as we did with some of the crossover that you see here. So buyer activity. Weekly showings have drifted lower since mid-April, but remain solid. 24,600 appointments last week. Guys, that's still healthy. That's still a great buyer activity. Assuming mortgage rates hold near current levels, Expect showings to experience a gentle seasonal slide over the next couple of months. A meaningful rate dip, however, would likely revive the demand quickly, translating into a noticeable bump in both showings and new contracts. I'm going to stop this. Guys, if we get a significant rate improvement, a lot of what I've been saying over the last 2 to 3 to 4 months might go out the window, okay? If we get a significant rate improvement, we could see those showings. Like, just think of this. We got rates in the mid to high sixes, and we're still seeing an incredible amount of showing activity. Imagine if that rate was like 4%. Now, I don't think that's going to happen. I don't even think we'll probably see 5. Maybe we get to high 5s, but I don't see that being a reality either. But at least in the foreseeable near future. But if we get a meaningful rate dip, this will change, and then you're really going to want to subscribe, because you're going to want to see what the market is doing and how it reacts. And guys, let me tell you, the market shifts in a remarkable speed. I mean, I'm talking days and weeks. You could be in a completely different market. So as big as the real estate market is, it shifts very, very quickly. Moving along, new contract. So this is homes going under contract. Contract volume has settled into a steady groove, 10 straight weeks of near identical numbers, well below the 2021 and 2022 frenzy, but healthy for today's market dynamics. Last week, 978 homes moved to pending, the fourth strongest tally of 2025, showing that buyers are still writing offers. So let me zoom in here. So this is kind of where we're at in terms of under contracts. The green lines are when the market was absolutely absurd. The blue lines are 23 and 24. So we're seeing fair. So here's, guys, this is so important. So you see how this orange line, the tan brown, is following suit to 23, 24. That's good. We're seeing a healthy amount of homes go under contract. But when we have that high of inventory, then you get an issue with negative price curves. And you get an issue with homes staying on the market longer. And so that's where we're at. This number, healthy, yes, but it's just not keeping up with inventory. Price reductions in sold price. 37% of properties have now experienced at least one price reduction. It's no mystery that reductions increase as inventory climbs and days on market get longer. Price decreases are a logical and wise market strategy for sellers who test the market and need to make adjustments. Days on market hit an average of 42 days last week. If history repeats, and it will, marketing time average will easily cross 50 days by end of summer and continue to climb through end of year. Guys, here is what all sellers in this, no, I shouldn't say that. Sorry. Here's what most sellers are experiencing in today's market. Again, there's those markets, like there's this pocket in Littleton, okay? Right around the 900, about 1.2, 1.3. That is absolutely on fire for the right house, okay? There are pockets bringing you up north to Brighton where things can go in a week, in a weekend. Houses going under contract that quick. But the majority of the market is experiencing this. This is days on market. You see this gap that's pretty much been all year. That's how much of a difference this market feels than previous years, where days on market has yet to break the lows of last year, 2023, and we're already starting to see that increase. My guess is this gap is going to get wider, it's going to get bigger, and we're going to set new records, at least for the past 5 years, of how many days on market. So just, guys, sellers, there is a market shift. Yes, there is ways you can control levers to allow your house to succeed when other homes aren't succeeding. But the reality is this: you being on the market for 50 to 60 days, 40 days, like, that's okay. That's normal. Doesn't always mean something's wrong with your listing. Now, there's ways in which we do weekly updates and reports and research on every single listing to identify whether or not there's a problem, whether or not there's something affecting your house not going under contract. But the reality is, it's the market saying, hey, if you're on the market for 40, 50, 60 days, that's okay. On average, so is everyone else. 18.8% of properties sold for over the asking price last week, leaving 59.4% of properties selling under the asking price and 21.8% at asking price. Okay, guys, 59.4% of properties selling under the asking price. The 18% of properties selling over asking price, I bet 17% of those priced well below market value so they can generate a bidding war and or are in those pockets where the market's just hot. And then 21.8% of properties sold at asking price. My guess is they probably had some sort of concession. Nonetheless, we're going to conclude here, and then I'll show you guys around the market. The Denver market is behaving exactly as the playbook suggests. Inventory keeps building. Marketing times or days on market is stretching, and price reductions are becoming a routine part of the conversation. And that pattern should carry us through the summer. The bright spot is demand. Showings and contract counts are holding steady, signaling fundamentally healthy pool buyers who are simply taking more time and driving a harder bargain. The takeaway, sellers need to stay sharp on pricing and presentation, while buyers can shop with a bit more leverage, but still be ready to move quickly if mortgage rates dip or the right property surfaces. I tend to, so this is a company report, guys. Really, really good information that I present to you guys and give you my thoughts on it. I tend to be much more bearish in my outlook of the market. I think personally, the market is a little bit worse than what you might see in headlines, what you might see in other market updates, what you might be. I do. I hope not, but the reality is I do. I think it's a little bit worse than what is being told. And by worse, I mean, you know, I think so. Here's a great example. Days on market. The charts are showing 42 days last week. Guys, I think that's probably closer to 60 days, right? The 59.4% of properties selling under asking, like that's why I said, well, I think that number is probably actually higher when you think of net to seller. So say you list at 700 and you're the 21% that got asking price, but you have 20K in concessions, right? So you wouldn't fall in this statistic of property selling under the asking price. But in all reality, even though you got your price, you are falling below your asking price in terms of net to a seller, right? And so that's why I'm saying, you know, I think it's a little bit worse than most people think. And guys, let me put a note in that. Okay, worse is so subjective. Worse doesn't mean bad. Worse doesn't mean wrong. I guess a better fitting word is I think there's a more significant shift going on than what I'm hearing from experts, economists, etc. Now, guys, I'm no economist. Please, I have no right to predict anything, speculate, but I do have the right to tell you what I'm seeing, boots on the ground. Okay. What negotiations I'm involved in on a weekly basis, what I see sellers willing to give, willing to come down in price, etc. So I do have a sense better than those who aren't in the market, but are much smarter and brighter than me in terms of economics, how different things affect the market, etc. But yeah, boots on the ground, guys. I think we're going to see our first negative price curve in a long time. If you're not new to the channel, you know that last week, Greg, what's up, man? Thanks for joining. Last week, Adam Zarapo and Jeff Cole had 31 properties listed to go to sell at public trustee's office, not counting Denver or Park County. Greg, look, here's the thing. What's interesting is I was looking at foreclosure numbers last week, actually. In fact, I'm now certified in short sales and foreclosures just because I think there's going to be a need in this market to be able to lock arms with somebody in a hard spot and help them navigate that. And hopefully we can avoid it altogether. But if we can't, like having a real high level professional be able to guide them and put them in the best spot possible. Nonetheless, through that, I was looking at foreclosure numbers, and they're not bad. So 31 properties listed to go to sell. A lot of those properties actually don't make it to public sell. If they do, it's still relatively low, at least from the numbers we were tracking last week. But I kind of expect that number to grow. Definitely starting to see more short sells in the market. And the reality is we're kind of at that point where interest rates jumped in 2022. Okay. So then we go to 2023, 24, and 25. We've got about 3 years of homeowners that have been in the property 2022, 23. And a lot of those homeowners, one, they got a really high rate. If they want to sell, home prices just haven't grown enough to where they've got a tremendous amount of equity. And so there's likely potentially a short for a fair amount of sellers out there. And then all those sellers that, there's what's called a temporary rate buy down, a 2-1 buy down or 1-1 buy down, where essentially a buyer buys a home and it's a 7% rate, but for the first year, it's actually 4%. The next year it's 5%, 6%, and then years 4 on, it's 7%. And so there is potential, cause for concern there of, hey, what happens if they didn't refinance? Rates haven't got a whole lot better since they bought. And now they're in that year 2 or 3 or 4 where their mortgage is going to go up, kind of like adjustable rate mortgage. But here's the reality. I just maybe credit card debt is at all-time highs. Maybe we start to see a really big fallout. That's not what I mean when I say getting worse. I think there will be some of that, but to really see an insane crash relative to 2008, you'd have to have a shock of supply. And even with those 3-2-1 buy downs, etc., the requirements for somebody to get into a mortgage, even 3 to 5 years ago, way different than 2008. So I don't think we're going to see that shock of supply, but I definitely think we're in a shifting market that, from my perspective, has shifted. And for a lot of folks that are buying and selling in this market, it's just going to take a level of acceptance with just how things are. And if we looked at it from that objective standpoint, guys, here's the reality. Market's going to go up and the market's going to come down. And it has from the beginning of time. And we're just in that market where, we're kind of coming down. We went up for how many years? 17-ish? We're kind of due for the market to correct. It's healthy. It's natural. It's the way it has been, again, from the beginning of time. But Greg, thank you, man. It's something we definitely want to keep an eye on, especially foreclosure short sales. If we start to see them really creep up, then that could very well be cause for a much more stark price drop or significant price drop. But we'll see. As of last week, tracking foreclosure numbers, there wasn't all that much concern there. Americans buy houses only to fill them with garbage consumer products day in and day out. Yeah, I mean, I don't know. I don't know that I agree with that. Yeah, I mean, I've got consumer products that are amazing. I enjoy. Nonetheless, all right, guys, let's go to the market. I just want to show you guys a couple of things. How do I want to do this? Let's go to, so my brokerage is in Littleton Co. I'm going to share my screen here in a second. If you guys have any questions, let me know. But I'm going to show you guys some stuff here. So Greg, yes, this was not NEDs, notice of elections demand. This was the list that came out Monday and Tuesday to go to sell Wednesday and Thursday. Oh, I see what you're saying. I've noticed in over 10 years. Yeah, that is a little bit more significant. Guys, if you see Greg's comment here, first comment was this. Last week, Adams and Arapahoe and Jeffco had 31 properties listed to go to sell at public trustee's office, not counting Denver and Park County. Douglas has no sell. And Greg is saying this was not NEDs, notice of election and demand. When an NED is filed, generally there's about 120 days. It's kind of the pre-foreclosure before a house goes to sell. Greg is saying this list came out Monday or Tuesday for properties that are going to sell Wednesday and Thursday. And that's the largest Greg's notice in over 10 years. Yeah, Greg, that's bigger for sure. I mean, it's 31 properties. In the grand scheme of thing, like, I don't even know if I'd say that's even 2%, 1% of the market, but you are right. Relative to what we've seen in the past, that's a pretty big list for a week, right? Because we've got weeks. Like, this is just 1 week out of the 52 weeks of properties going to foreclosure. So yeah, Greg, definitely something we definitely want to keep our eyes on coming into the market, because if we have more of supply hitting the market, it's not going to do us all that well. So, okay, this is interesting. So, but I'm going to share my screen. We're going to go in Littleton. So my brokerage is in Littleton. So that's why I'm choosing Littleton today. I service all of Denver Metro. I know just about any market you can think of quite well. I'm a native here, born and raised, been in the business for 10 plus years. But let's see here. So what's interesting on this right side, let me make sure you guys can see my screen. Guys, if you have any questions, let me know. We'll probably finish this up in about 10 minutes, but I just wanted to show you. Let me think. For sellers, frustrated, house isn't selling, maybe you've taken it off the market. Yeah, just informational purposes. Like, just on this front page, we see a price cut of $25,000. Price cut, $10,000. Sorry, guys, my kid's peeking in here. Sorry, guys. I'm a real estate agent. I work from home. Price cut, $55,000. Price cut, $4,000. So you guys can see what I'm saying in my stats. Sorry, I didn't show you this. Here we go. I could see it. I just typed in Littleton, and what I'm showing you here is this one, price cut, 4,000. Where's the other ones? Price cut, $55,000. There's another one, price cut, $10,000. So just in a quick Zillow search, you could see, guys, like, it's not just one person. Like, it's just the whole market. Like, everyone's filling it. Most people. Again, we have those pockets in our market. Dang it, I zoomed in and now I can't zoom out. Here, let's just go back to Zillow. But what I wanted to show you guys here is what I'm hoping, not only just to kind of show you the real life market, but I also wanted to show you. So when you go to Zillow, and this is something that is actionable for you guys as sellers to do, is you could come in here and you can go accepting backup offers and pending under contract, and you can apply. And then what I want you to do is what might be helpful for you. And we're actually going to go over to homes.com because I think this will show it better. So let's go to Littleton or wherever you're at and come into all filters and unclick for sale. Unclick, go to under contract and pending. Okay. The reason for that is, like, first things first, like, you can start to get an understanding of what pockets are going under contract. Okay. You can start to get a idea of, so for instance, Nadine's, look at her pictures. Look at the presentation of this. Amazing. Like, curb appeal is great. You could tell they mowed the lawn. Like, it, beautiful, beautiful pictures. You can see the lawn. Look at the presentation. Like, guys, now more than ever, it's important to have exceptional presentation, preparation, and price accurately to the market. Okay, guys. Now let me see if I could see days on market. 23 days on market. They crushed it. So if you're in this neighborhood in Littleton, let's go find it again. We're in Kipling Hills. Here we go. Where are we at here? Yep. So you're close to Columbine Valley. Here's Marston. Here's Beaumar. So you're just west of downtown Littleton. So if this is your neighborhood, you can come and look. Okay, say, okay, this one was 710. Here's how much square feet they had beds and baths. Look at the presentation of the property. They're priced here. And that's going to help you kind of shape and understand your ability to list and sell your house. Okay. Let's look at some other examples here of pending and under contract. This one was 980. Again, look like beautiful presentation of a house. They went under contract in 11 days, right? So you can start to see the property's going under contract in a relatively quick amount of time. Amazing presentation. And guys, like, yes, is it going to help if your house is completely updated? You've got the newer carpets, you got the finished basements, the granite counters, etc. Absolutely. But it doesn't necessarily mean you have to have all of that. What I'm getting at is if you present and prepare the property exceptionally well, it's going to result in a much quicker sell, likely for more money, and you're going to succeed in this market much more than other listings. Okay. So that's some examples for you guys of what to do. You could go in here, take a look at the area, see what's going under contract, why it's going under contract, their beds, baths, square footage. And this is for you guys to go do yourself. If you have a high level agent, and even if you don't or do, like if you're working with me, I'd still encourage you, go do some of this research for yourself so that you can understand the market. The next thing you want to do is go to for sale. Okay. Oh, check it out on homes.com. You could do foreclosure, short sell, etc. But what I want you to do is go for sell. Okay. And then you could look at, homes that have been on the market more than 3 months. And you could start to, if you're getting frustrated or if you're taking your house off the market, I'm not going to look at these listings because I don't have, it's not my job to go critique these in front of the world, but go look and see, okay, this was my neighborhood. What other homes have been sitting for 30, 60, 90 days and why? And then you can start to get a good understanding of your house, how it's presented, how what to do if you want to sell quicker, what homes are staying on longer, why they're staying on longer. Like, even if you're not an expert at real estate, it won't take you long to start to see the difference in between those homes that are going under contract and selling quick to those that are staying on the market for some time. And then from there, you can somewhat start to at least minimum understand what your agent's telling you, or better yet, be able to come in as a partner in the conversation. Say you haven't listed your home yet, but you're watching this and you want to, and you call me. My information I'll throw in the comments for those of you considering listing, wanting to talk to a real estate professional, maybe don't have one yet. You call me, you do your research. Like, this conversation is going to be so much more impactful when I can lock arms with you and say, all right, cool. Here's what I'm seeing. And you say, cool, here's what I'm seeing. We can kind of weigh against each other and arrive at a purchase price or an offering price that is going to set you up for success. We have a conversation around property preparation. You already have ideas of what that means because you've been looking at the market, etc. And so, guys, all this is to set you up for success. And guys, with that, if you don't have any more comments, I am going to exit out. We've got some work to do. So much appreciate you guys for joining. Don't forget to subscribe to the channel, like, share, comment. You guys have no clue how impactful that is to us growing the channel. Guys, I'm not here for a short time. I'm here for a long time. We want to grow this channel. We want to serve more of you guys when it comes to real estate. And every Wednesday, we have a Denver real estate market update. And then we'll have a video a week highlighting and showcasing different communities around the area, going into different dynamics of the Denver market, etc. So be sure to subscribe. Thank you guys for joining, and we'll catch you next time. Cheers.